All right, a little under the weather today, but Coinbase listings are hot, and there's 3 going on right now. They're open for deposit, but not yet trading. And a lot of Coinbase listings, they either list and drop real hard and bounce, and they offer an opportunity to get in on the bounce, make some quick gains, or they list and they pump and then they drop, which offers you some potential there. If you just stay awake and alert for the listing when it starts, you can kind of get an idea. And if you miss the first few hours, sometimes, in the next day or two when people realize that it's trading, the opportunities are really good as well. So I'm just going to go over these 3 tokens real quick. And the first one is ARPA, a privacy preserving computing network. It is sub-dollar, but it is up 47%, probably on the news of the listing in the last 24 hours. How much more could that run from the listing? I don't know. This is probably one of those ones that drops, comes back down to, maybe one of the lower supports, maybe 12 cents, and then bounces and offers some opportunity after people dump into liquidity. This token has a lot of potential long range. How quick the adoption is right now on this token, I'd say probably not too much. I mean, you're probably going to see a good little push because Coinbase does that. But afterwards, I don't know so much, but this is the only token right now that's listed of the 3 that's sub-dollar, and that attracts a lot more traders because in their mind, they think, hey man, I get a sub-dollar, it's going to go to 2 or 3, make 1,000% returns. They see something listed at $40, like the next token we're going to look at, and that's not the same way you think about that. So even though this might be something that's worth more down the road, not so much of a hot trader to begin with, it's still got a good shot because of that metric of it being sub-dollar. What do? Privacy preserving network. They offer the ability for, say, like banks to share blacklisted information between each other, but without compromising the integrity of your ID. So that works in like AI, training, so that things just work better, faster as far as like risk off asset to help with those kind of networks with banks and things. Probably not a lot of people in crypto are going to like that, but it offers a lot of solution for big business to come in and be the adoption that we need to bring in the next wave of traders and volume of people to push all crypto as a whole forward. So this network down the road, I think, has a lot of potential. I mean, obviously, the downside is that someone come along and do it better than them, but for now, it's a good thing. So let's look at the next one. The next one is Perpetual Protocol, and they are a on-chain DEX with highly efficient liquidity provision up to 10x leverage for makers and takers. I looked them over a little bit. They offer some weird things, actually. And I think overall, it's a very interesting looking product. It probably has a better chance right now of going up because of what they offer and do, and DEXs are so hot. But they're already $16, but they are down from 19. And overall, they're on pullback. So I don't know. We could see some bounce. We could see some pullback. I mean, there's a lot of like areas that it could go to. It could go to 1090. It could settle at, the $14 area. It could, pump to 1980. But what I really like is that the range is $11 to $19. So no matter what it does, there's a chance for, some capture of gains. And as far as what they do, I didn't like this about them. The team claims that the perp is the first virtual AMM, which enables markets with no makers while still guaranteeing on-chain liquidity. These maker-less markets lower the capital demands traditional markets require and pave the way for new and emerging futures. I like that part. The part I didn't like, though, about this virtual AMM was if they run out of, let's see, where was it at? It might have been on the other page. Anyway, if they run out of insurance and you have your money staked, they just print more PERP tokens. There we go, right there. Perpetual Protocol Insurance Fund is guaranteed by the holders of its native token, PERP. The insurance fund is used to cover any unexpected losses from leveraged trading. If the insurance fund is depleted, Perpetual Protocol will mint more PERP to refill the insurance fund and cover the losses. I don't know, I didn't like that. But I think overall, most people have no idea what that means, and they're just going to like the token. They're going to be happy about a new, DEX AMM. So in general, it's covering the hot buzzwords. Good project, has some good price, has a good range between the 11 and the 19. That's got potential to capture some gains in the next couple of days. Next thing we're going to look at is Bounce. Bounce is already $40. It's up from 33 in the day. It's up probably 20, looks like 20% on the listing news. And the potential spots are probably 27 with a mid range of 33 and the high of 42. That's a good range to trade. This one, I don't know. I mean, I looked at it for a minute and I wasn't exactly sure what they do. It plays across chains, full scale participation, unlock the potential of open finance. People that know what to do with this, it's probably a great thing, but they've got kind of the buzzword things too. NFT marketplace, the biggest stars, their rarest works, directly accessible to fans, make your own markets, advances the Polkadot system. I don't know. It touched a lot of hot buzzwords. I think down the road, like this will probably get adopted more as people get more into NFTs and more people come on. But Bounce powers an ecosystem of products for auction. Build, design, connect, collect, and trade all kinds of assets, tokens, and NFTs across multiple blockchains. That interconnectivity is worth a lot. I don't know if it's worth a lot just right now as people are coming in and people want, to be across multiple blockchains. But I know, say if you develop on Proton, you're not selling on OpenSea and, vice versa. Those chains are very split. I don't know if this particular company allows that, but it sounds like they do. And if they do, then they've got a lot of use at some point. As far as price action goes, I don't really care what they do because I'm not looking for this to invest and hold. I'm just looking at, is there potential range? And the potential range in 3 months is $14 to 43, $44, and we're at the high now at the listing. So I'd look for a pullback to a bounce play potentially. And I don't think I would keep any of these early on. I think I'd let them settle first. And even if they were higher and had to pay higher, if it proved that it's worth that and is going to go higher, then so what? It's better than finding out that most of the ramp is from the Coinbase listing and that it's going to pull back and settle around 23. Don't overpay for things to hold, and don't miss opportunities to trade where you could capture some gains. But that's what we're looking at today is ARPA chain, perpetual protocol, PERP, and Bounce. And each one of those has potential. I think Coinbase generally vets for good projects. However, some of the projects that get on here are really, really early and they provide massive opportunity for down the road. And of those, probably ARPA is the best only because it's sub-dollar and people generally like to spread their money out, further, especially if you only have $500, $1,000. A lot of the onboards nowadays, they're getting into crypto because they've seen that BTC went from, a couple bucks to like 50,000 and everyone's like, oh, I missed a run. And even if BTC goes from 50,000 to 100,000, that's 100% gain. For ARPA to have 100% gain to do everything BTC is probably going to do through the rest of this year, it could be tomorrow. ARPA could go to 30 cents tomorrow. It could, retrace to 13 cents and rebounce to, 20 something cents and give you the same 100% gain. The chance on that is a lot bigger. And you could get a lot more coins. People just, they want the ability to be like, man, I could get like 10,000 of these coins and it could go up $1 versus, they buy $10,000 of BTC and it goes up 100%. Like, it's not nearly as exciting. It doesn't reward the chemicals in your brain as much. So I tend towards that metric right now in crypto because of where we're at in the adoption cycle and in the legal and with the people that are being brought on through TikTok and other styles of marketing versus solid fundamental financial investors that look at things and go, how far out is this chain from adoption? And that's not the kind of traders that we're seeing. We're seeing like the TikTok marketing of people that are making the moves swing wildly up and down because they're not fundamental people. They're marketing people. And that's netting a giant opportunity for places like Coinbase and other places where a solid token gets listed, but there's a potential for them to have greed and desire and be like, man, this could go like 200%, 300%, like SHIB and stuff. I don't think it's a super bad token. I don't think it's a super quality token, but the thing's up a couple $1,000% basically on, TikTok marketing, not fundamentals, not on, steady growth or anything other than TikTok fundamentals where we are in the cycle. So I'd keep that in mind as you look at these to invest. I don't think I would invest in these just right now long-term. None of them are bad projects, but I think I'd let them settle first, personally myself. Good luck.